When it comes to coffee houses, Starbucks is by far and away the market leader, with more than 33,800 stores globally. While the main portion of those outlets are based in the US, as you'd expect, the Seattle-based company has been growing faster in China than anywhere else in recent years. The rate of growth has been so rapid, in fact, Starbucks is now competing with Subway and McDonald's to become the most dominant Western food chain in the world. At one point, Starbucks had plans to open a new store in China every 15 hours, and as of 2022, there were more than 6,000 outlets in the country with no signs of slowing down. Clearly, there was a gap in the growing Chinese market for commercialized coffee, but Starbucks' dominance would not go unchallenged forever. In 2017, a homegrown rival emerged, offering convenience and affordability that posed a significant threat to the American giant. In just 2 years, this rival company even managed to surpass the number of Chinese outlets it had taken Starbucks 20 years to establish. Things appeared to be going well for the newcomer. The only problem was, this new company was not entirely legitimate. Grab yourself a cup of coffee and get settled in, because this is the story of Luckin Coffee, the Chinese company that dared to challenge the twin-tailed mermaid. So, first things first, how do you compete with a business behemoth like Starbucks? That was the question facing entrepreneurs Jenny Zha and Charles Liu in 2017. By that time, Starbucks had already been in their country for 18 years, since 1999, and had established a large following. Zha and Liu didn't just want to build another small-time local coffee chain either. They wanted to become the dominant player in China, if not the world. So, they needed a way to stand out and draw some of the crowd away from Starbucks. A good place to start was their brand. The duo decided upon the name Luckin Coffee, with the mission of, quote, creating lucky moments and stimulating aspirations for a better life. At least, that's Google's best translation of the company's mission statement. This element of luck and superstition would appeal more to a Chinese audience than a big green mermaid for sure, but Luckin Coffee would still need to provide good service and decent products to back up the name. For this, they would make, quote, full use of a new retail model of mobile internet and big data technology, as well as working with high-quality suppliers in various fields to create a high-quality consumer experience. Getting away from the wordy corporate speak, what that meant for customers was that they could download the Luckin Coffee app to order and pay for drinks online. They would then pick up their orders in-store, with most outlets not even accepting cash and acting purely as pickup zones. While this idea wasn't exactly revolutionary, as Starbucks had released their own app 8 years earlier in 2009, Luckin Coffee doubled down on this aspect, and its business model stood in stark contrast to that of Starbucks with its sit-down coffee houses and over-the-counter orders. In theory, Luckin Coffee's approach would be faster and more convenient, especially for young tech-savvy customers and commuters who need to save time while grabbing a cup of coffee on the go. As it turned out, the entrepreneurs were bang on the money, and Luckin Coffee quickly became a major player in the Chinese coffee market. The company's rapid expansion and innovative approach attracted investment from titans such as BlackRock, who invested $125 million, as well as Singapore's sovereign wealth fund, GIC, and China's own International Capital Corporation. By October 2018, Luckin Coffee had established 1,300 stores, surpassing UK's Costa Coffee chain to become the second largest coffee brand in China. Additionally, Luckin Coffee formed a strategic cooperation agreement with the Chinese conglomerate Tencent, one of the highest grossing multimedia companies in the world. This would work wonders for Luckin Coffee's marketing approach, which involved spending 3 times more than its actual earnings in order to fuel the company's growth. Luckin Coffee's massive advertising campaigns featured Chinese celebrities and financial incentives just for downloading their app. By the end of March 2019, the number of Luckin Coffee stores had ballooned to 2,370, more than 90% of which were pickup stores with limited seating. By the following year, the company achieved a stock price of $50 per share, equating to a $9 billion valuation. However, while everything might have seemed great to potential investors and outside spectators, all was not well beneath the surface. Insider leaks would soon ignite a devastating scandal that would bring the high-flying coffee company to its knees. In January 2020, Luckin Coffee would be hit with accusations of fraud by the investment firm Muddy Waters Research. The investment firm released a scandalous publication claiming that executives at Luckin Coffee had fabricated sales figures to inflate the company's revenue. Muddy Waters had undertaken some clever detective work, paying hundreds of Chinese residents to review CCTV footage of customers entering Luckin Coffee locations. From this, the firm was able to estimate the amount of revenue that would realistically be generated by said customers, and concluded that Luckin Coffee had exaggerated its profits by as much as 89%. On top of this, Muddy Waters claimed that Luckin Coffee had falsely reported the amount of advertisements it had paid for by as much as 150%. If you're wondering why a company would want to inflate its advertising expenses, it makes sense when you realise that investment firms in 2021 looked for revenue growth over profitability, and high advertisement expenditure was often a good metric for future revenue growth. Of course, Luckin Coffee initially denied the allegations and pledged an internal investigation shortly after its release. In April 2020, however, much to the dismay of investors, the allegations were proven true by the company's own internal review. The document from Luckin Coffee revealed that the chief operating officer had fabricated $310 million in fictitious sales to attract investment in the company. Within weeks of the revelation, the scandal led to the resignation of Luckin's COO, as well as the CEO and other top-level executives. More to the point, the company's reputation was shattered, with its stock value plummeting more than 80%. The Securities and Exchange Commission also launched an investigation into Luckin Coffee, and the Chinese company was ultimately delisted from the Nasdaq Stock Exchange.
Now the Nasdaq says it's time to delist. In fact, it hasn't been traded since the start of April, so I guess this is just a black mark for corporate China.
By September 2020, the Chinese government had fined the coffee company for approximately $9 million, and on top of that, Luckin Coffee was forced to settle a US class action lawsuit to resolve investors' claims for $187.5 million. That's a lot of red on the company books, and even though red is an auspicious colour in China, it's still not a colour you want to see on your company finances. As if all those penalties weren't enough, Luckin Coffee was also hit hard by the China lockdowns. With heavy restrictions in place, its reliance on delivery and in-store pickup service became a problem. The company's financial struggles deepened further, and it became clear that Luckin Coffee was now in serious trouble of going bust. In October 2020, the company announced that it had filed for bankruptcy and was seeking to restructure its debts. Luckin Coffee's future was hanging in the balance. Remarkably, despite the challenges it faced, Luckin Coffee managed to survive. In 2021, the company was taken over by a group of Chinese investors who vowed to turn the business around and restore its reputation. That same year, the company announced it had reached a settlement with the SEC, agreeing to pay the $180 million fine and admitting to the wrongdoing. The company is currently in the process of restructuring and rebuilding its business. A recent unaudited report for the third quarter of 2021 revealed that Luckin Coffee's total net revenue had increased by 105.6% compared with the previous year. Providing those figures are legitimate this time, it demonstrates an impressive comeback. Yes, the road to recovery will be a long and difficult one, but having already established a loyal customer base of its own, there's every chance that Luckin Coffee will soon rise back to the top. It takes a lot of courage and effort to go up against a massive company like Starbucks, so for that, the founders of Luckin Coffee should be commended. However, in trying to inflate their numbers and steal the mermaid's crown too quickly, Luckin Coffee got burned and was rightfully punished for it. Now, with new management in charge, only time will tell whether Luckin Coffee will continue to rise from the ashes and reclaim its place at the head of the Chinese coffee market. One thing is certain, the story of Luckin Coffee's demise and potential rebirth is one that will be remembered for years to come.